Hi there, my name is Patrick Kamau Kamure, and welcome to today's lesson where we start on a topic called the tax investigation. And under the tax investigation, we have the first topic, which is supposed to be the tax fraud. So in the tax fraud, we are going to see how the taxpayer can be able to defraud the Kenya Revenue Authority and what normally happens to that, and all the matters relating to the tax fraud. So in this case, I'm going to first of all read for you the objective of this lesson, and pay attention as I read through. And then after that, I'm going to define you what is the tax fraud, and we look at the way a taxpayer can engage in tax fraud. So this is the objective of the tax fraud. So lesson objectives, we have understand and define tax fraud. So by the end of the lesson, learners will be able to clearly define tax fraud, including its key elements, such as willful act to evade tax laws, falsification of documents, and underreporting income. They will also learn to distinguish between tax avoidance, which is illegal, and tax evasion, which constitutes fraud. So that will be the objective of this lesson as we go through it. So the first thing that I'm going to do is to define for you what is a tax fraud, and I'm going to write for you here the definition, and then we discuss it. And then after that, we are going to look at in which ways a taxpayer can engage in those tax frauds. So we start. Tax fraud is an illegal act of intentionally falsifying information on tax returns, or any other form to reduce tax liability. It is a deliberate deception of tax authority. So that is the definition of the tax fraud. That one, it is an illegal. So here we have, it is an illegal. That when you engage in tax fraud, you are actually breaking the law, because anything that is illegal is against the law. So you engage in tax fraud, you are engaging in an illegal activity of intentionally falsifying the information on tax returns or any other form to reduce the tax liability. So remember, when you want to tell the KRA how much income that you have earned, you normally go and file or returns. So a return is a form which you normally fill to declare your taxable income. And from that income returns that you have filed, then you can be able to compute the tax you are supposed to pay. So that means that if you falsify, you don't give the true information about your income, that means that the tax that you are supposed to be charged will go down. And in that case, because you are falsifying, not giving the truthful information, that means that you are doing an illegal thing. We are also saying that it is a deliberate deception of tax authority. You deliberately deceive the tax authority to think that whatever you are telling them is true, whereas it is supposed to be the other way. In this case, we are going to look at some of the activities or transactions one can carry out that can lead to tax fraud. So I'm going to write them here. So these are some of the activities that can lead to a tax fraud. One, under reporting the taxable income. The taxable income. And this is where the taxpayer under declare the taxable income in the returns of income. What we are trying to say is that one of the way you can be able to engage in tax fraud, that when you are filing the returns and you are declaring taxable income, the one that the KRA will charge you the tax, you state a lower figure than the actual figure. So it means that they are going to tax you on a lower figure, and in the process that means that you pay less tax. That is one of the way. Another one is inflating. Number two, inflating the allowable expenses. So this is with the intention that the taxable profit will be understated, and therefore the tax liability will also be less. So that is what we are saying another way, in which case a person inflates the allowable expense. We know when we are taxing the business income, we said whether it's a company, whether it's a sole proprietorship or a partnership, you usually deduct the allowable expenses to get the taxable profit. So a person, for example, who have electricity expense, electricity for the business we know is allowable of, let's say, 100,000. Instead of declaring 100,000, they add a zero at the end so that it will become a million. So that means that the taxable profit they will get, it will be less. When it is discovered, that is a way of engaging in tax fraud. We look at another one, is use of falsified documents to determine the taxable income. This document may include invoices, receipt, the debit and credit notes, purchase agreements, etc. So that's another way in which you can engage in tax fraud, that you falsify your documents. Which documents? Like invoices. You see, when KRA is carrying out an investigation, one of the place or documents they normally use to determine your tax position are called the source document, where you got the information to determine the taxable income. And this we normally talk about the invoices, the receipt. So in this case now, instead of using the correct document, you go and falsify them. Like in this case, if you had an invoice that has a sales of 1 million, instead of indicating 1 million, you indicate 100,000, because we know that sales, when they are understated, sales is an income. When it is understated, the taxable income will come down. Another way, concealing, that is supposed to be number 4, concealing assets. And this is done in order not to declare the correct taxable income where the assets can be transferred to offshore accounts. Offshore accounts or tax havens. So that's another way that a taxpayer can transfer his or her assets to an offshore account. An offshore account is an account that is outside Kenya and taken to a place called tax haven. Tax haven is a country which tax rates are very low and they don't disclose information concerning taxpayers, so they or any citizens. That means that when a taxpayer go and he put the money there, like an asset, cash, you know, in that case, that means that the government, even if they want to access your information to know how much income you earn, they cannot do that because they normally have an agreement that they cannot disclose your information. Another one that we normally have is claiming. Number 5 is claiming false deduction or credits. These deductions may include mortgage interests, we have the mortgage interest, we have contribution to a registered pension, capital deduction, claiming insurance relief, on insurance cover, which one does not qualify, etc. So in this case, we are saying that you can claim false deductions which you don't qualify. Like when you are under employment, you are told that if you have mortgage loan, you can claim mortgage interest relief to relieve you from paying more tax, to reduce your taxable income with. You also learned that you can use the amount you contribute to a registered pension scheme to reduce your taxable income. When it is business, that we learned that capital deduction or capital allowance on fixed asset can be used to reduce the taxable income. Now, we also learned that if you have a life insurance cover or education insurance cover, you can claim insurance relief to reduce the tax that you're supposed to pay. So, you know very well that you don't have them or you don't qualify for the same, but you go ahead and claim them. That is supposed to be a tax fraud because you end up paying less tax but illegally. Another one is intentionally non-payment. That's supposed to be number 6. Intentionally non-payment of taxes. This means the tax the taxpayer is required to pay is not declared or remitted to the KRA. Yeah, so here we are saying that it can be a legitimate tax that you're supposed to pay, but you decide that you are not going to remit anything to the KRA. So that means that you don't. So that means that that's supposed to be wrong because you are supposed to, tax are compulsory and you must be able to pay them. So if you don't pay them, that means that you are breaking the law. Another one that we normally have is carrying out illegal activities. Carrying out illegal activities in order to evade tax, i.e., engaging in money laundering. So that's what we are saying, that another way you can carry out illegal activities like money laundering. Money laundering is whereby you illegally transfer funds using other channels in order to evade the proper loopholes of the law or the proper mechanism of the law where the government does not know. So you use them in order to reduce the tax you're supposed to pay. On the same carrying out illegal activities in order to evade tax, one can also use shell companies in order to evade tax. So shell companies are companies which are registered with the government, not purposely for the purpose of doing business. They don't do any legal business. They are just there to be used to transfer funds from one country to another in order to evade tax or to just keep money, but they are not there to do any business. So that can also be used as a way of carrying out a tax fraud. So that is how you normally go about, or one can go about doing the tax fraud. Now, on the same, it's very important for you to note that tax fraud, as we have said, tax fraud is illegal. However, tax illegal, before I talk of however, is illegal, and therefore attracts fine, penalties, and interests. However, tax avoidance is a legal way of reducing one tax burden. One's tax burden. So tax evasion. Tax evasion is a subset of tax fraud, which is an illegal way of reducing tax payable using the methods indicated above. One can engage in tax avoidance through taking advantage of tax loopholes provided in the law. So that is what we are saying, that it's very important for you to know that tax fraud, as we indicated, it's an illegal way of reducing the tax you are supposed to pay. So when it is discovered, you'd expect that you are going to be fined, you are going to be penalized, you are going to be charged interest. However, if one engages in tax avoidance, of which case we have said tax avoidance is now legal way of reducing the tax you are supposed to pay. You cannot be fined because in this case, as we had indicated here, you use the loopholes that have been provided by the law, what the law said to in order to reduce the tax you are supposed to pay. Now that should also be differentiated from tax evasion. Tax evasion is a subset of the fraud, in which case one illegally reduce the tax they are supposed to pay, and they use these measures that we have talked about here in order to reduce the tax they are required to pay. So that is what you need to know about the tax fraud. So I like to formulate some few questions or to write for you some question here relating to the tax fraud and see how we can be able to answer the same. So I write the question and then I read you the answer, see if we can be able to relate to what we have done. So I write the questions and then we answer them. So class question. Number 1. Defining tax fraud and key elements. So what are the key elements? What are the key elements? That constitute tax fraud. Tax fraud. And how does it differ? From the legal practice of tax avoidance. Number 2, willful act to evade tax laws. In the context of tax fraud, in the context of tax fraud, describe what is meant. What is meant by willful act to evade tax laws. And provide an example. An example of such behavior. Number 3, falsification of documents. How does falsifying documents contribute to tax frauds? And what are some common types of documents that are manipulated in this fraud? Number 4, under reporting of income. Why is underreporting income considered? Underreporting income considered a form of tax fraud. And what are the consequences of this action? For both individuals and economy. Five, legal tax avoidance. Versus evasion. Explain the difference between tax avoidance and tax evasion, and why one is considered lawful while the other is a criminal offense. So these are the questions that can help you or guide you in relation to this lesson of the tax fraud. And I'll read the first question: defining tax fraud and key elements. So what are the key elements that constitute tax fraud, and how does it differ from legal practice of tax avoidance? Now, I want to give you the answer for that. That is defining tax fraud and key elements. The key elements that constitute tax fraud include deliberate deception against tax authorities, illegal activities like falsifying records, and any other action taken with the intent to reduce the tax liability unlawfully. This contrasts with tax avoidance, which involve using legal method to minimize tax liability, such as investing in tax-deferred retirement plans or claiming allowable deductions and credits. Tax fraud is criminal and intentional, whereas tax avoidance is legal and within the bounds of the law. That's the answer for the first question. We go to the second question. Willful act to evade tax laws. In the context of tax fraud, describe what is meant by willful act to evade tax laws and provide an example of such behavior. So the answer is here. Willful act to evade tax laws. A willful act to evade tax law means intentionally taking action to avoid paying taxes that are legally due. An example of this would be intentionally not reporting cash income to the tax authorities. This is a deliberate violation of tax laws as opposed to making an honest mistake on a tax return, which will not be considered willful or fraudulent. Now we go to question number 3. Falsification of documents. How does falsifying documents contribute to tax fraud? And what are some common types of documents that are manipulated in this fraud? So the answer is here. Underreporting income. Underreporting income is considered a form of tax fraud because it involves intentionally reporting less income than what was actually earned to reduce the tax liability. The consequences can be severe, including fines, penalties, and even imprisonment. Economically, it undermines the tax base, leading to a deficit in public funds and could affect government services and overall economy. The next question we have, that whatever I've read was about falsification of the documents. So, falsification of documents. Falsifying documents to commit a tax fraud might involve creating fake invoices to overstate business expenses or altering personal income records to underreport earnings. Then these acts are intended to deceive tax authorities into believing that one's tax liability is lower than it actually is. Common falsified documents include receipts, ledger books, and employment records. Now we go to the question number 4. Underreporting of income. Why is underreporting income considered a form of tax fraud? And what are the consequences of this action for both the individuals and the economy? So now the answer is here. Underreporting income. Underreporting income is considered a form of tax fraud because it involves intentionally reporting less income than what was actually earned to reduce tax liability. The consequences can be severe, including fines, penalties, and even imprisonment. Economically, it undermines the tax base, leading to a deficit in public funds, which could affect government services and overall economy. So that was question number 4. We go to the question number 5. Can read from here. Legal tax avoidance versus evasion. Now explain the difference between tax avoidance and tax evasion, and why one is considered lawful, while the other is a criminal offense. So here is the answer. Legal tax avoidance versus tax evasion. Tax avoidance is the legitimate use of the tax regime to one's own advantage, to reduce the amount of tax that is payable by means that are within the law. For example, claiming all legal deductions and credits. On the other hand, tax evasion is the illegal evasion of taxes by individuals, corporations, and trusts. Tax evasion often entails taxpayer deliberately misrepresenting or concealing the true state of their affairs to the tax authority to reduce their tax liability. And it includes dishonest tax reporting, such as declaring less income, profit or gains than the amount actually earned, or overstating deductions. Tax avoidance is lawful as it complies with the tax code, while tax evasion is a criminal offense because it involves deceit, concealment, or violation of legal duties. So that is what you are supposed to know about the tax fraud. So I'll read you some of the questions now, the one that you can attempt on your own. So here are the questions. Question number 1. What are the specific actions that differentiate tax fraud from the simple error or omission on tax returns? Number 2. How do tax authorities like KRA detect and investigate potential case of tax fraud? Number 3. What are the legal repercussions for individuals or corporations found guilty of committing tax fraud? Number 4. Identify any recent high-profile tax fraud cases and discuss the methods used to perpetrate the fraud. Number 5. What measures can taxpayers take to ensure they remain compliant with tax laws and avoid unintentional tax fraud? So you can look at those questions, see if you can be able to answer them relating to the lesson that we have just had. So for today, we are going to stop there. Hope to see you in our next lesson. Thank you very much.